Hey, Ryan Lee here with Planet Cheapskate, and I am popping on for our weekly rate update. Unfortunately, this had to be a pre-recorded rate update because the internet decided it wanted to be dial-up today. I tried to do the live update twice, and it was choppy, more choppier than a Japanese restaurant, so had to pop on and do this pre-recorded. So I'm doing it live, but it's pre-recorded. So just wanted to say what's up to my realtor partners out there. Hope you have an awesome weekend. I'm seeing the things starting to pick up a little bit. We had a little bit of a slow July, but I'm seeing things pick up a little bit in August. It's looking really good. So if you need anything, if you need any cost sheets, if you have any questions, if you need any pre-approvals, let me know. I'm your guy. I'm working on the weekends with you. I am here. If you're doing any open houses, let me know. I got some marketing material. I got list reports absolutely free for you. Make some awesome marketing material. So got you. Let me know and we'll get that all taken care of. So I wanted to tell a little bit of a story that just is, it's important to know that you're working with someone who knows their stuff and someone who is going to set your people up on the best path forward. So a couple weeks ago, I was watching the news and I seen someone with a very prominent bank, credit union actually. They're really the same thing, bank, credit union. Uh, Going on there and talking about HELOCs. HELOC is a home equity line of credit. So you tap into the equity in your house and you use it sort of like a credit card. You can borrow against it. You're only paying your interest on what you borrow. So, uh, three things she said that I absolutely disagree with. The first thing was the best time to get a HELOC is when you don't need it. Horrible advice. HELOC has a draw period and a repayment period, and the better rate you get is the smaller draw period. So, for instance, the best rate's usually going to be a 10-year draw period. That means you can use it like a credit card for 10 years, and then you have 30 years to pay it back. So, during that 10 years, it's an interest only payment, and then the following 20 years, you're going to do principal and interest payments until it's paid back. So, getting the best rate by taking the 10-year when you don't need it, that means it's counting down. So then when you finally need it, you might only have 5 more years to use it before you got to do that principal and interest payment. So horrible advice. Only get a HELOC when you need it. Don't get one when you don't need it. It doesn't make any sense. Second thing I disagreed with. She said everyone with a home qualifies. Absolutely not the case. You have to have equity or a principal balance in your home in order to qualify. You can't just close on a home paying 3% down, go and get a HELOC. It doesn't work like that. You have to have a substantial amount of equity in your home to figure out if it works for you. If you don't know how much equity you have, reach out to me. You can give me your address. We can pull some information from your mortgage statement, figure out if you have the equity needed to get a HELOC. I can do them all day, every day. I love doing HELOCs. The third thing she said that I absolutely disagree with is that you shouldn't use a HELOC to pay off credit card debt. And that is absolutely not the case. If you look at it, HELOC is typically about a 0.5% to 2% higher than the standard going conventional rate. So, for instance, if you're paying 6% on your conventional, you're going to be at 8% for a HELOC. Okay, good example there. So, do you want to pay 8% on your HELOC or do you want to pay 28% for a credit card? It makes no sense whatsoever. You're always going to want to pay the lower interest rate. So, it's absolutely beneficial for you to pay off your credit cards using a HELOC. The other thing, um, a lot of our industry got bombarded with people when money was easy. In 2021, 2022, tons of people got licensed and they started doing loans because they were easy. It was easy money, but they don't have the knowledge doing the difficult loans. Someone was coming in, they want me to train them, and I said, "Hey, you better pray for the most difficult and hardest loans in town, because those are going to make you the best loan officer possible." You never learn anything from those smooth, easy files. You learn something from taking on the hard files. That's where you learn the most, and that's how I've gotten to where I have the knowledge that I do is because I don't refuse those hard loans. I do manual approvals, weird things going on. I'm going to figure out a way to get it done. So that is my spiel. Let me get right to these rates. The not looking too bad. August rates, hot off the press. So before I get to these rates, let me just explain about these rates. These are not rates that you can go to your bank, you can go to your credit union, you can go to some lender and demand. They're not going to give you these. They're going to give you whatever rates they feel like they can get away with. They are loyal to that institution that cuts them their consistent check every single week or every 2 weeks or however they do it. These are rates that I get by being loyal to you as the borrower. My fiduciary duty is to you, but I make them compete. I make all the banks compete. I have East Coast, West Coast, some here local, make them compete. I take a typical borrower, someone with a 700 credit score looking to borrow $250,000 on a 30-year fixed, and this is for a 30-day lock, which usually it should take about 30 days for us to wrap you up once we get a contract. So my rates by making the banks compete conventional, I have 7.25 with an APR of 7.546. FHA is at 6.625 with an APR of 7.342. VA is at 6.625 with an APR of 6.832. And USDA is at 6.625 with an APR of 7.075. So that is the rates. Conventional is about an eighth of a percent higher, and FHA, VA, USDA staying flat. So August rates hot off the press. Hope you enjoyed it and hope you have a happy and safe weekend. Stay cool because it's hot as heck out there. And I guess we're going to get a little bit of a cool front moving in, so we might get a little bit of a relief from the heat. And I think next week, I think we're going to get a little bit of rate relief too. So super stoked about that. Rates started out ugly earlier this week, and today they came back. They were resurrected by a weaker than expected jobs report. So that is that. I will see you on the other side. Bye bye.